You have a military background, right?
Yeah, yeah. I went to Naval Academy and then served as naval officer a few years after that.
What was that like?
So it was it was a lot of ups and downs. It was not in the moment. A lot of moments were not very enjoyable, but it was I mean it was a very cool experience, right? Like at times you're at a university in this military environment. You're like all your friends are at a normal college and doing what seemed like more fun stuff, and you're freaking doing drill and push-ups and waking up at 4:30 in the morning and on like your freshman year. And it's like, what am I doing right now? But I think the experience was just invaluable, and it just like allowed me to like embody and take on a lot of like leadership roles and things like very at the age of 18 and get exposure to a lot of cool things, flying planes and ships and other things like that that were pretty unique. So it was good. It was good. But was you couldn't pay me to do it again. I'm glad I did it though.
How did you end up transitioning from that? And like, what was your story afterwards?
I went to I went from the went out from the military into so I was stationed in Pensacola, and as I was transitioning out, I was interviewing with tech and banking companies. So I was like kind of looking at both areas. Ironically, I actually even applied to work at Uber, and they denied my application. Like they said no pretty quickly, which is very serendipitous now. Um, but I ended up going with a banking. I ended up going the banking round doing capital markets because I had started a company when I was in the Naval Academy in the financial services space, focused on like platform that actually taught people how to trade in FX, and then we connected you to a lot of coaches who traded for a living to help you like apply that knowledge and coach you over time. And I just got into it because I was like really into trading FX and then doing like IPOs and equities and other things like that, just from a retail trader standpoint. And then I went and did that at an
How,
institutional level in the capital markets group.
how'd you get into those asset classes and not just traditional equities as a retail trader?
I think it's because like as I was doing the equity side, I got exposed from the friend who I'd catch up with from time to time who was also into equities, like got pretty deep into FX, and you're just like, there's a lot of interesting benefits to it, and you should check it out and check out this. I remember the course they told me about. It's called like babypips.com, and there's forex is everything's measured in pips, and so I ended up seeing that. I was like, wow, it's interesting because I was an economics major. I can keep up with a lot of the macroeconomic kind of events of the world that are taking place, and but also like not have to keep up with like so many different stocks that exist. Like you're keeping up with a few major currencies and then combinations of the pairs as well. And so like the non-farm payrolls comes out or someone changes their interest rates. Like yeah, they have impact on the equity markets, but you can also see how those directly impact um, like countries and their currencies and things like that. So I don't know. I kind of found it interesting because of that, and I stumbled into it and stuck with it.
Was it at all common to be entrepreneurial at the Naval Academy? Was it
No,
encouraged,
no, it wasn't.
discouraged?
It was highly discouraged. Not that it was like, not that they came out and be like, you should not. I mean, they definitely came out and said you're not allowed to start a company, right? And so like that was not something I was supposed to do. And I would work, very late at night in like computer labs or my room or other things, and to work with my partner, staying up super late just to trying to like build this company. But it was, I mean, even before that, I was always selling something at school. I sold, I had a few t-shirt concepts that took off at the school that I was selling to people. I was like the go-to person because you couldn't get out off campus during the week. I was the go-to guy for like tobacco refills because I would order them from a different state and get a big bucket of refill. And I was an early adopter of the Square swiper for your phone. And so I just had everybody come and swipe, get a refill. So it was like I've always been doing things like that since like sixth grade. And then I, got to finally like starting a real like kind of formal company once I was in school. So I think it was just kind of led to that point. It was inevitable to get to starting something like that.
And then how'd you
Um,
get to Gridwise? What was that transition like in the process of starting Gridwise?
yeah, I would say is with Gridwise, it came from like when I was stationed in Pensacola, exposed to I was exposed to Uber pretty early on, and I saw that when well, I was exposed to them when they launched in Pensacola, and I remember someone like sitting me down on the couch and like, yeah, there's this new app that I use when I travel, and I can, request this car with my phone. It comes and picks me up at the airports, and I'm like, what is that? And it's like just like taxis. What's the difference? And then the app that they showed like with Uber was like completely blank. It had no drivers on the map. I was like, this is what is this? And then later they like really pushed up the more aggressive in the launch and started to take off. And I took a few rides, but then I actually signed up to drive. And I was like I was riding like on my spare time that I had from time to time. I was like going out and driving, and I like quickly learned how challenging it was to be a gig worker and a lot of the pain points that they dealt with. And I just like felt blind out on the road. And there's a lot of operational questions you're trying to or answer as you're planning of like deciding whether to work or not. You're out making real time decisions, and so when you like fast forward, that perspective was created, and you fast forward that to when I got out of the military. I went into banking. I was also driving for Lyft, and the whole time I was doing all this, people were just like, "Why are you doing this?" I was like, "I don't know. This is really intriguing to me. It's an interesting market, interesting concept." And like I had a list of like 25 ideas. I knew I was going to start something again, and Gridwise wasn't even on the list at the time. I was like working through fleshing them out, and then as I started taking a lot of rides with different drivers as well, I started to hear them complain about the same pain points I had experienced, and that's kind of how the whole idea came together. And then kind of the rest is history. How we
What
started from there.
are some of your memorable rides from a driver perspective?
Never had anybody ask me that before. Is I would say some of the memorable ones, like the early on. I'm reaching back in the memory bank here. Is where my wife and I would go out to eat, and we didn't have a lot of money then either. And we'd go out to a restaurant, get something to eat, and I'd turn on the app. And usually, if I went out to a certain area, it would take me back to where I was at. If I could get a ride back to where I go, so I'd like accept a ride around the restaurant that we ate at after we were getting our check. And then we'd get in, and I'd pick up the people. And my wife would be in the front seat. I'd be like, "Ah, she's here. Like, don't worry about her." And then we pay for our meal based on it through like subsidizing that with the trip back. So those were really funny rides back then. We did that pretty often.
That is clever. And what are some of these common pain points that you experienced?
Yeah, I mean, I think it's like when you're out as particularly in like when you're in rideshare at that time, like you think about being a driver, it's not like us who may show up or like anybody in a traditional job who shows up to work and there's probably like a schedule of things you need to do or there's a calendar and it's like you kind of have an idea of like what you're going to be doing that day. But when you think about being a rideshare driver, is you have no idea what's about to happen that day. You kind of just go and you turn on the app and someone requests you and you didn't know where they were taking you at the time. And so like you may end up at way outside the city. And so like a challenge you deal with is like understanding like, hey, I'm taking you to this place and I don't know if I just drop somebody off. Should I stay where I'm at? Should I go back into the city? Should I go to the airport and try to catch a ride from there that may bring me more money? And you just think about that throughout the day. Like that's just a constant challenge that's happening in real time. But then like if you kind of think about what's happening before you even get out on the road, you're asking yourself, should I go out and work right now? Is it going to be a good time? Like if I'm working part time and I don't have the same schedule every day, is this a good time for me to go work? What's happening right now? How do I make sure that I don't have an empty car the entire time? And then after I finish actually working, how did I do? What were my hourly earnings? How am I doing compared to the rest of the market? A lot of the things that you think would be like a pretty basic thing for for someone to glean from the service they're working for, but actually uh, hasn't really existed that well. And then when you multiply that, or you expand that or extrapolate that out by the fact that most of these workers are working for multiple services, now all the information is even more fragmented, and your data is fragmented across different places. And so that's what kind of led us to thinking about how do we create this kind of central source of truth to kind of be your record of truth of everything that you do across all of these platforms. Your from a financial perspective, activity, your trips, your every area, your profile, your reputation, but also really design an application that helps you maximize your earnings because it's so dynamic and it's hard to really predict or plan. We can kind of curate a lot of the key information that someone would need and insights that help inform when and where they should work, who they should be working for, and things like that.
And that ultimately led to you starting to develop this app. Like, what was the initial concept? How did you think about forming the team? How did Gridwise start?
Yeah, I would say as it relates to starting it, because I had experience of starting a company before, although it wasn't like a venture scale company, I learned, I had a chance to make a lot of mistakes in starting it. And so in learning from a lot of mistakes I made in the first company, one of them was around just kind of focusing too much on product early on before you actually have, rather than prioritizing customer feedback and getting something into people's hands. You're trying to over perfect the product. I always like to call it like the product bubble that you're kind of operating within. And so the approach that we took, like when I initially got the idea for Gridwise, I was like, all right, let me go out and create some like no code landing pages. And I was like, where are these users at usually? Found all these like Facebook groups, like 200 plus Facebook groups that existed across the country and forums and other things. So I was like, I started to like take a message I had the initial like the link to the landing page that we created. And when I sent it out in this group, all these groups, and I was like, hey, I don't know if anybody's heard about this company, but I started using this app last week, and I made like 30% more my earnings. I made $300 more last week, and they'd be like, and so like from that, like in a week of like finding the Facebook groups and sending those messages out, we had like 500 people sign up on this landing page, but the product didn't actually exist. So it's really an experiment for me to like prove out that like, hey, this is something that's actually like there's a market for this, and it's worth kind of spending my time dedicating life and sweat equity to kind of building out and taking advantage of kind of an opportunity to service this market. So that was like where we started, and then I knew I needed to find a technical co-founder, and because my background, I mean, coming into this, I didn't really know much about software at all. I didn't even know what an API was when I started the company. And so I was talking to a lot of people who were smarter than I was, and it relates to software, and they were helping me think about how to build software and the things I needed to think about, but also the people and the skill sets to really think about. And I had the privilege to meet a multitude of great people, and I ended up meeting Brian Finnemore, who's actually our co-founder and CTO today, within Pittsburgh, and we got connected through a mutual contact, and we went and we did our own like little founder dating sessions, and then we hit it off and joined forces, applied to a startup accelerator who invested about $25,000 into the business, and through that was like the mechanism we needed to like justify us leaving our jobs full time, and for me to convince my wife to do it when we just had a newborn son and had barely any money. And so it was like that helped us like to have some resources to put directly into the business, pay ourselves almost nothing during that time, but then use that to build up traction in the market, focus on Pittsburgh that allowed us to go raise some more money and then start to build the business from there.
Was the initial uptake as good as you had seen in those early days with the Facebook groups?
Um, it was, but the transition to getting to that uptick and getting to the product of the market like took a little bit of time because like we had this set of landing pages. We got into this program, and then we were like, we almost found myself repeating a similar problem of going back to that product bubble. We're just like, well, we got some money now. Let's build the like sexy vision of what this looks like. We had all these mock-ups of heat maps and all these other things on them that we thought would be valuable. And then, as we looked at it, it was like, hey, this is going to take longer than we have runway to build this application. And that's if everything goes perfect, which nothing ever does. So how do we get, so we had to ask ourselves, which was a great exercise to go through, how do we get something into someone's hands as quickly as possible to get some feedback and help inform what is the application we build? And so we didn't even, our first product wasn't an app. Our first product was a weekly email that had a list of events and airport trends and weather and other things that you're kind of construed in a way that like was centralized, but also like kind of framed it in a way that like kind of speaks to earnings opportunities for workers in different days. But then so that was like your planning information that you needed for the week. And then there was like a text message service that we would send that allowed us to, Brian had built, and this allowed us to just manually text people who signed up for our platform. And we would text them like 3 times a day. And really what those texts were kind of earnings opportunities that were more reflective of like real-time opportunities. So we'd be like, hey, there's there's a there's an event that's letting out in the next 30 minutes, like this football game or this concert, or hey, it's going to rain in the next 25 minutes. And really, the way we were capturing a lot of this information was very manual, not scalable at all. But it allowed us. What we did is we were subscribed to about 20 different applications on our phones that were alerting us all the time on different things like sports scores or weather or things like that. And then and then we were going out to event venues where like there was no feed of like a Taylor Swift concert, and be like, hey, talk to the bouncer, be like, hey man, like our security is like, when do you think this is going to let out? And he'd be like, oh, roughly around this time. And then we would text that out. But we would go out and we'd be driving for Uber or Lyft at the same time. and then we were driving, we'd go to the airports, do donuts and coffee and set up a table so people they're just waiting and they're like, whoa, donuts and coffee, let me go there and see what this is about. And then we tell them about Gridwise, and it was like good for customer discovery as well. So we ended up pretty quickly after we launched the product, within like just a few months, we were able to get to about 15-20% penetration in the Pittsburgh market with no real mobile application. And it was just like that text message service and email service. And then that was like the traction that we needed to really launch into like the traction we needed to raise funding. And so we ended up that got us to raise our first kind of pre-seed around $500,000. And I have no experience in raising money, as many of us who go into these things for the first time like don't have. But like what I realized and what I did advise everybody, looking back from that experience is that it's like, the takeaway for me is like traction trumps everything. It's just like it doesn't matter what your product is. If you can, traction is going to be a representative signal of the market adopting whatever the state of your product is, and that's what everybody's going to care about, not how sexy and shiny this the product is and the mock-ups and how good of a designer you have it. So those things matter over time, but as long as it's you're able to kind of tie that into like how you build a business.
And was that traction also generating revenue? Were people paying for these newsletters and texts?
At the time, no, no, it was completely free because we were just like our vision was like in like the way we saw things and the opportunity was like it was twofold. Is one is we saw that there was like we were very attuned to this problem and the challenges that gig workers had, and we were designing solutions that were focused on helping them increase their income, maximize their income, and in parallel, we were kind of just like we're trying to figure out where do we stand in the market, like what are we to the industry right now, and as we were doing so, I remember month one of the company, we went and watched a talk from a executive at Ford at Carnegie Mellon. He talked about all these like use all these terms to describe like smart mobility and talked about the future of autonomous vehicles and all these things happening in transportation mobility and that we hadn't really been as attuned to. And really like a big takeaway from that is that like, hey, all these systems are evolving. The way that people and goods are moving is like that mobility, the mobility modes are evolving to more on demand methods, and really driven by the wave of Uber and Lyft that are kind of catalyzing all this. But for any of these entities to, cities or automotive OEMs, like car makers or other types of entities to be able to evolve, they need like access to like what is actually how are people adopting these services? What are like they need access to data is what it came down to. And and so we're like, that is really interesting. We anchored onto that a lot, but we're like, who else? Like, let's talk to some of these other people. So we talked to insurance companies, we talked to the city of San Francisco, we talked to all kinds of different businesses, and we saw a very common pattern and trend across all of them. They lacked access to key data on this space that helped inform how do they innovate, how do they future proof their businesses, how do they make better informed investment decisions, and and so we saw an opportunity to say, is like, hey, let's prioritize our core mission of in empowering workers to maximize gig workers to maximize their earnings. But in turn, like the future, like kind of monetary strategy can be like getting high density number of users in every city, using that to create a network effect that creates a more unique set of like insights for the users who are using the application. But in turn, on the back end, we can productize a lot of this data, anonymize it, and create different data sets that makes a completely inaccessible data set accessible. And so that was like our thinking in like month one or two of the company, very early on. So that was why we had deferred monetizing, because kind of our vision and direction where we wanted to take the company was kind of anchored on some of those like kind of fundamental early learnings that we had.
That's fascinating to have had. This is a pretty complex business model. It's one thing to just build an app for gig workers. It's another thing to then say, hey, let's think of second, third order effects of who else might be interested in the data exhaust and how to then solve all these interconnected problems. So no, it's pretty interesting.
Yeah, it's interesting how it's played out. I just I don't know. We gravitated to making our lives as complicated as complex as possible. Is really what it comes down to. It's like how do you build a and we didn't start building the data business from the ground up, but it was or like from that point in time because you had to kind of prove and scale this application and do this nationwide, build density, do other things, and so like really we never had lost sight to the kind of the core focus of that. But then yeah, as you add more businesses and you do it with limited resources and a small team, it's the timing of that needs to really carefully be considered because it can start to pull you in a lot of different directions. And so I think definitely some learning lessons that came out of it. We figured it out over time, but it was tough once we started doing it.
How did you decide what to do next? So you raised 500 grand and you have all these options. You can build the app, you can expand to other cities, you can get feedback from potential data buyers. How did you progress from there?
I think we once we early on learned that this was going to be like we were going to go down the this kind of venture track, whereas like it sounds so ignorant coming into to when you hear these things from someone in my position now. It's like I didn't even think about fundraising as a solution to like scale my business. It was like I didn't even know I could go out and really raise millions of dollars in capital to kind of subsidize growth in the company. And so, like, a lot of those learnings came early on. And as we started to raise capital, we started to see ourselves like going in the path where it's just like, yeah, we have a huge opportunity to grow into. And we've got some great momentum, great backers. And after we raised, we saw that it made sense to, as we thought about growth there, we needed to like expand markets. But as we expanded, like what we were doing in Pittsburgh was not going to scale across the country. We wouldn't have Brian and myself going and visiting security at the concerts in different cities all the time. So we needed to figure out a more scalable solution, which naturally transitioned itself into a mobile application that we could build with ways to kind of scrape or collect or receive crowdsourced data that allowed us to kind of replicate a lot of the things that we were doing before we had Mint. So that was the first thing we did after we raised money is we were doing that. And then as we launched the app, we launched in the DC and we launched in Chicago. And our goal is to say, hey, we want to prove out as the next set of milestones that we've proved out how to increase it, like how to penetrate Pittsburgh market. Now we want to do in three different markets that look very different from one another. And they're pretty accessible for us to kind of travel to, meet with users, do some community events and things like that. And so we launched to DC and Chicago and we kind of proved out and figured out penetration in those markets. And then that's when we kind of raised a larger like seed round, and that started to allow us to really start to kind of build out the team a lot more, pay ourselves what was closer to a living wage, and and start to scale out to many more cities from there. So that was as we did so, we had an opportunity to actually go into another accelerator program, which wasn't our strategy to get in as many startup accelerators as possible. But TechStars had presented itself as an opportunity, and they had a very mobility specific program at the time in Detroit. And we saw this as a really great opportunity for us to really entrench ourselves into the mobility ecosystem more and build out more of a network there with investors, with corporate partners as well. And so that's what we did. And that program was just immensely valuable to us. And we met so many people through that in a very short period of time. And so that really kind of helped launch us out even further and faster and with a different perspective, a strategic perspective on how we wanted to go about growing the business.
How much was the seed round?
The seed round, I mean, it was, I think we had raised 1.3 million in our initial round there. And then we had raised, I think it was in 2019. No, yeah. So that took us through 2019. We saw growth. We were going from a handful of markets to, I think we went to 30 markets that year or something like that. And we're seeing like very exponential growth in the company. In 2019, we launched our monetization models of a subscription in the app and the advertising business there. And as we did so, we went into 2020. That kind of fueled us into like a seed extension round that we raised of like 3.3 million, and that was like 3 weeks before the pandemic that we closed it. And then as the pandemic came, I think we all know what happened to rideshare there, and we were very indexed towards rideshare delivery. Supporting delivery workers was in our purview, future roadmap, but our business instantly tanked completely, and like our users, our advertising partners, we just lost like 90% of our user base and revenue. And not that we lost them completely, but they were dormant. They weren't going out working for Uber most of the time, right? And just as much as those companies were impacted. So that was man, it was just such a curveball because you went from this like really strong momentum that was building up the business, and we were just getting ready to we were busting down walls in the office we were in, we were rebuilding, we were expanding space, and again co-located in Pittsburgh and had all these plans for what we were going to do, and then that happens, and now you're just like, whoa, pause everything and let's like figure out. We moved to like I think like biweekly board meetings for a few months, and like we're just like trying to figure out what the hell to do, and pretty quickly we had expanded into supporting delivery workers, started to build some features that like more relevant for them from an insight standpoint and tracking standpoint. And once we did that, that started to, delivery started to take off during the pandemic. So that allowed us to start to really take advantage of that wave. And we saw, a very large dip in the first half of the year through the pandemic, first 6 months, and then we started to see that momentum pick back up going into 2021. And then 2021 was a great year of growth for us as well. And that led us into raising a Series A in 2022 of about 12.7 million.
Wow. And in 2019, when you were expanding in all these markets, that's when he first started charging for the product, and he said it's through advertising. What was the monetization strategy then?
Yeah, it was we had turned on a we started with a subscription. Um it was actually going into 2019 we launched a subscription. So like right at the end of 2018 we had an advertising business. And the advertising business like kind of stemmed off of a affiliate marketing stuff we were doing with different partners. A lot of just people kept coming to us quite often and saying that um like asking us to say is like, hey, is there a way that I can acquire drivers through you? Like we care about drivers in our business, whether it's like a rideshare company or a delivery company. They're just like, we want to use you guys for this in these markets that you're available. So we're like, yeah, let's. I mean, we're like, yeah, of course you can. And then like on the back end, we're trying to like figure out like how do we track all this? How do we like set up links? How do we do all these different things? And then out of that, it just kind of organically fruitioned to an advertising business because we're like, wow, more and more companies care about this, and then you have like insurance companies and finance companies and others, and we're just like, more and more people want to like reach this demographic, and and so that transitioned itself into standing up an ads business with like much larger contracts in like 2000, end of 2018, going into 19. In parallel to that happening, our engineering team and product team was focused on building out the subscription model. So like that was like really the core focus, and the advertising piece kind of just came along and bubbled up with it. It didn't require a lot of like those resources to kind of be applied to that. So that was great to see how that kind of those played together. And then the subscription model was really a premium model. So we wanted to keep the core value of the product free, but then allow a or it's a premium model, but allow a premium version of the product to be available for people who cared about more advanced insights or analytics about their own data, their own driving behavior, like performance and things like that. And so we priced into that, and then that started to grow as well as the ads business, and we saw like pretty good growth leading into the pandemic that kind of led us to that seed extension round at the time.
And coming out of the pandemic and fast forwarding to today, is the business, how has it evolved? Is it still skewing towards delivery, rideshare? What about the revenue
Yeah,
breakout between subscription and ads?
yeah, I would say it's definitely been more. I mean, it's completely evolved in terms of the mix of users. We used to be predominantly rideshare. Even once rideshare started to recover a bit more, I think rideshare started to still make up a pretty large portion of our user base. But now, if you look at the mix of users, it's majority of people are participating in delivery. And so, like, if you look at the rideshare only users out there, it's probably about 12% of our user base now, where you see a much larger, you still see a large share of people in rideshare, but they're also working between categories of rideshare and delivery. And that naturally like caters itself to, companies like Uber Eats, who it's easier to do that because like, Uber has Uber and Uber Eats, so you can kind of do both categories within one place, whereas others are working for different services and multi-apping between them.
And what's happened to some of these features that initially you guys were providing visibility into where to go, where will there be a lot of demand? I imagine now Uber is doing a lot of this themselves through the app, or is that still not the case? Like, how are you competing at all with some of the platforms directly?
Um, yeah, it's interesting is there's always this like kind of slight area of competition in terms of like features that we provide that the gig platforms may want to provide to create a stickier product for their users. I think where as you look at demand and things like that, I mean demand really is like what Uber has always shown drivers or Lyft or any of these companies is kind of like this map which is known has been known as like a surge map, and now they show incentives or bonuses or all kinds of different things to the user, but it's really just a reflection of imbalances of their marketplace and a way to like kind of incentivize people to go to an area that they need supply, and they're willing to pay a premium for people to do that. Now, for us, there was competitors to us who were kind of like independent apps that were like surge apps. They help you keep up with like where's the surge in real time, and they'd like back in like reverse engineer like a lot of the waypoints on Uber and try to like get surge pings or tie into like an API and go abide not abide by the terms of service in the way they use it. So those apps don't exist anymore. But we always thought that was like a short-sighted approach to how to build a product, and we wanted to take the approach to really leaning into the value of having cross-platform insights and information in our application. And I think that's what's always going to differentiate us from the other market, like from the marketplaces, is to say is like, hey, you can see something on Uber in there. Now, some things that Uber shows like you could see also in Gridwise, but there's a lot of things in Gridwise that you will never see in Uber unless they decide to become Switzerland, which we don't see that happening. So we're more of the Switzerland, and we can kind of show you what's happening across all kinds of categories of platforms or different platforms, and other insights beyond that.
Let's pivot a little bit and talk about the data side of it, which was part of the initial idea. Now, all these years later, you're selling data as well. Talk about that.
Yeah. So I think I'll talk a little bit about like the kind of the evolution into that is like again like we had the vision of this early on, right? But when could we actually do this? Like was a it was a challenging point in time to figure out like how do we get to like what does the market really want and need, and how do we get to those things? Like early on, we were like, hey, like there's we started to understand, and or early on and over time we built a perspective of a lot of the key data points that we knew were important for different types of constituents or different to support different types of use cases, right? For some it's like understanding the financials and the pay, the difference between the pay and the price, the customer price, while also understanding like pick up and drop off and location, dwell time of workers, working patterns, like all kinds of stuff. And so there's like over time we had to build kind of this technical roadmap that unlock these different types of data through our application that leverage location data, actually ended up leveraging linking into these platforms as well that pulled in a lot of the trip data and earnings data programmatically in an automated way. And so as we got to a point where we had a lot of the right boxes checked, now it was like getting to a point of just like, all right, well, how do we bring all this together and offer it to someone? And like, what is the right way to do that? We thought everybody wanted the API feeds and like real time feeds on this or that, or like maybe some dashboards, some heat maps. Again, I always bring up like the heat maps of what we was gravitating towards thinking about, and and that was where we saw what really our approach to figuring that out was very similar to how we started a business. It was like create something simple, get it in their hands, and figure out like and get feedback and see if this is what they want. And really, our approach to doing that in Gridwise Analytics was a data dictionary. It wasn't an actual product that people were using, but it was like data dictionary and some sample data of like and but the data dictionary we ended up creating was a suite of like unique analytics, like metrics that you wouldn't find anywhere else, that you could see across different categories, across different services of different types of categories of utilization, efficiency, worker wages and pay, consumer trends and things like that. And and that was like we were just like kind of talking to companies like, hey, let's we pretended that we had this. That was what we did. We were just like, yeah, we can do this like that or blah blah blah. But like we're just trying to get feedback. What is most important for you? Like how would you prioritize? Like if you had to pick kind of across these things, what is most important? If we were just trying to figure out like what do we start building right now and trying to like narrow down and understand what people value the most out of what we were presenting. And so we just kept iterating that data dictionary and then we closed the deal without having a product. And it was a very sizable deal. And it was for relative to like for your first enterprise deal, and and that was just like wow, like this is awesome. Now we need to go build this really quickly. We got about like a month to do this, um, so that's how it started, and then from there we just started to get more and more traction in the industry, started to engage with a lot of different types of companies, and then started to really refine our focus into like the segments that made most sense to kind of build around and solution around more because we had no idea on where to focus at first. And then from there, we've really scaled down to a multitude of data sets and analytics and a suite of analytics we provide. We never have provided an API feed. Most of our product or deliverables through analytics or through a CSV that we provide people on like a weekly, monthly, or quarterly basis. But it's like the actual insights that or the analytics and metrics that are kind of most unique to what we provide that are cross-platform, encompassing of the view of the entire market. So that's kind of how we stood it up, and it's grown to become a very large, pretty large component of our business today.
Awesome. It's a great segue into one thing we wanted to chat about today, which is some of the use cases, some of the things that you guys are doing. And you obviously have visibility into the drivers, but you also have visibility into the companies that they're delivering for example.
Mhm.
And I know, yeah, those are some of the things that your clients, especially on the financial side, are interested in, right?
Correct, correct. Yeah, it's I would say is we have we work with a lot of companies in the financial services space now, really serving to be a leading indicator for performance on companies like Uber and Lyft, DoorDash and Instacart, as well, and but also really helping them think about the performance of a lot of the companies that are actually benefiting from delivery as well. So you think of the merchants. So you look at quick service restaurants or grocery chains, convenience stores. Others are all being they're all like a lot of their top line revenue is becoming more and more driven by third party delivery. So we're helping financial services kind of see gain that delivery perspective while across merchants, while also and then how that's contributing to their performance to help them better predict what that is and make better investment decisions, while helping them do the same on kind of the view we provide on the gig economy as well.
Do you want to chat a little bit about the McDonald's use case? And that was one of the other things that we were looking at with you guys in terms of some of the catalysts that have impacted the company in the past couple of weeks.
Yeah. Happy to. I think it's been a been pretty interesting to see how things have played out since October. And so as we looked into, we've done a lot of different types of analyses like this internally, but also our partners and customers are doing a lot of similar things and looking at this. But we look at McDonald's specifically as like back in, I think many of us may be aware is that in back in October is like they had an E. coli breakout, and as they did, there was quite a large amount of people who were impacted by this very quickly. And so you started to see, when you look at the trend or like the impact of what happened there, their in-store sales instantly started to drop. I think within like 3 days, they ended up dropping about like when their foot traffic like plummeted about 10%. Right. But when we look at it from the delivery perspective of what we see directly is in that first week, we saw delivery volumes drop by about 13% there. And as they did, it was really interesting for us to kind of get a picture into kind of the consumer behavior and patterns and the shifts to other competitors. Because as you saw that instant drop into McDonald's, you started to see the kind of switch or substitutes of where consumers started to gravitate towards when McDonald's was not the choice, the first choice that they first choice anymore. And so you started to see that actually impact it was Taco Bell and Chick-fil-A both saw about in that first week instant boost in their delivery volumes of about 5% since that drop. But now we've seen those volumes hold of where they gravitated towards through November and no turnaround in volumes yet from McDonald's on that. I think it's been that the consumer perception that's obviously created from those kinds of instances, which happen from time to time in these companies, is definitely hurting them right now. And why is it hurting them? Is because you look at companies like McDonald's, about like I think 10% of their sales are coming from delivery, third-party delivery right now. And when you look at those sales and how they're continuing to grow it, as McDonald's has been like I think a shining example of how of showing restaurants of how profitable and how much growth opportunity there is within delivery, is they've been like the number one player there. And like a big driver of that has come from like the transaction value. It's like their transaction value on delivery is about 50% higher than what it is in store. And so there's a massive difference. The margins are showing to be much higher. And I think you're seeing they've gained a lot of benefits from that, but they're losing on it right now because of this whole E. coli situation that's taking place.
Why are the transaction values higher in delivery? People are just ordering more in at home, or do you think they're ordering for more people? What do you think is the play there?
Yeah, I think it's a good question. I think it's like they are. I think they have a broader reach than people who care to like maybe come into the McDonald's in store. And you have and the broader reach is to like if you think about the people who are the demographic and population that's using Uber Eats and willing to pay for delivery fees and other things are just less elastic to price and price changes than maybe people who are coming in store. And so I think they just have because of the inelasticity of consumers on those applications like Uber Eats and Instacart and others like that, you have the ability to kind of warrant more pricing power when you're pricing on those platforms.
And I think that the question around recovery is very interesting because you obviously would expect to see a decline after an E. coli outbreak or any kind of negative event
Yeah.
for any company. But what I think is interesting about food, as we all know, you have one adverse reaction to mushrooms as a kid, and then for the rest of your life, you don't like mushrooms. So I'm
Yep.
wondering how sticky some of these behaviors are. I've obviously seen it with like Chipotle, we've seen it with some other brands in the
Yep.
past, but with food in particular, those people that have been impacted by it, that is one of the things that biologically speaking, we remember for a very, very long time, and we tend to shy away from the thing that we think caused it.
Yeah, yeah. Even if it's like, people have, food poisoning incidents and you may not even know which place gave you food poisoning that day if you're, traveling to a new city or something like that. But if you have any perception of what that is, you're definitely going to stay away from whatever that place was. So thinking of how that applies to something like E. coli is, for those people who are impacted and kind of the nodes of the social network that they expand into, that's going to have an direct impact to that population there. But then I think in terms of the general brand perception from the population, is like that's going to have a lingering effect for some time, and it's going to be interesting to see how that starts to how and like when there would be a recovery. But I think those competitors in the space, you look at Taco Bell, you look at Chick-fil-A, you look at other stars, even Burger King had about a 1.3% boost in volumes that week as well. Is that it's an opportunity to build loyalty faster and to kind of persist that and use that to continue to build some during this period of time to when at some point people are going to forget about this. The broader population may forget about this. So this is their time to capitalize and take advantage of that within delivery.
How granular is your data? Are you able to see it within individual trips? So I'm thinking of a use case around if I wanted to know, like let's say someone orders delivery Uber Eats for the first time or orders from McDonald's for the first time. And
Yeah.
how often does that person go back to ordering? Or even in this case, if they used to order, they have a negative experience, they stop ordering, does that same person end up going back at some point, or is the growth coming from additional users?
Yeah, I would say is like we can see like our understanding is very granular. Like we understand and a reason why is because like you think about the the features that we need to power in the app for users require location data, right? Like we help them track their tax deductible miles, track all their miles and routes that they're driving on, things like that. So we're streaming location off of the application directly, and so that gives us a pretty granular understanding of like where are people parking, when are they entering the restaurant, and where how long do they wait there, when do they leave, and things like that from an efficiency standpoint. But then also is like we gain the visibility into the trip transaction. So when you look at the transaction, you can see the actual point of where the origin point of where the rideshare trip or the delivery order originated. You get the merchant that originated that fulfilled that order, and then you understand where the drop off happened from the consumer standpoint. You understand how you can see the gig worker and how difficult it was or not difficult it was to actually fulfill the order. And you'll hear a lot about in the industry the challenge with the last 100 meters. You look at people in big cities who are ordering in apartments and they don't have the right codes, they don't have anything else. So like we can see that behavior directly through the application. And so I think that's we're extremely sensitive to PII and exposing anything around that. So any of the products that we provide, kind of obfuscate a lot of those things with the insights that come from that behavior is like what we're able to drive and actually expose to others outside of ourselves who kind of hold a lot of the more granular level behavior like that pretty close to the best in accounting for like PII and things like that.
What are some other examples or case studies that you're getting from your hedge fund clients?
Mm. We've seen some interesting ones. We've seen some where people use us to kind of back into or track like M&A trends based off of like trip volumes, the fluctuations in trip volumes at headquarters of companies. So like predicting uh, if there's a awareness around particular types of companies having conversations or like a acquisition maybe happening of a particular company. You can see like visits to their headquarters start to increase, or like or to another company start to increase. That's something that it's not going to infer all of them. There's a lot of these things that happen virtually like this as well. But we've seen use cases like that. We see use cases for just like getting a bit deeper understanding of like we are, I would say, the only like source of truth at scale that can actually provide insight into profitability on a per trip and per order basis. So like we actually see the take rate and the take that the platform takes on the platform like Uber, Lyft, or others take on every ride. And so we see some interesting patterns there. But that is like a key direct contributor to like that driver pay. And as you look at driver pay, is that variable component of bonus is a major factor into their take rate and is a major factor in their profitability as a business on a per unit, like unit economic basis. And so we can a lot of when they're using us to actually monitor the health of the marketplace. They can monitor, measure supply, liquidity, retention, behavior, loyalty, behavior of workers across platforms, but also the economics and kind of infer what profitability looks like because of that. So I think there's a lot of we've been excited to see a lot of use cases come out of this, and I love to see continued adoption of the ones that we know are like very solidified in the market. But I always love seeing those kind of like creative ones where people are trying to like back into some very take some very alternative approaches to kind of deriving some signal in what's going on in the market.
How does that take rate actually happen? Like, do the platforms experiment and change their take rates, or what's this concept of the bonus that you mentioned? Like, isn't it
Yeah,
always the
we'll
same
think of it
percentage
as
that they take, or they actually change that around?
yeah, there is experimentation, and I think they've got it down to a science now where I don't want to I don't want to speak too much on how they may handle their own programs, but from what we've seen, I think when I say they have it down to a science, I think they can personalize the way that they go about taking on different rides from a on a per driver basis. As well, but you'll see rides where someone may take 10 or 15%. And that may be like there's a lot of factors that go into this. It's like could be the weather, could be the origin, the destination, the traffic that exists, or the city, all kinds of different things that go into this. But at least see or the time of day. Oh, but we'll see some trips that maybe like has like 80% taken from it. Or and so like that's which isn't always great to see such a large amount on that side. But as you look at the take, is like the companies they have like kind of a few levers to play around with to like best serve the constituents of their supply side of the market, like the drivers, right? And so like base is like usually one that doesn't fluctuate as much, but like it's different in every market. It can change. It will change. Across markets. There's a lot of experimentation there. But the variable ones, you think of the two major variable ones is or three is there's on a trip there's two and then there's like non-trip variables, so I'll talk about that. But there's like bonuses on the trip, so you think of that as like surge pricing, the incentives that are paid to like get you to actually go take a trip from this particular area of the city. So that will you've seen that years ago spike up substantially, and then the companies changed their entire model where they've gone from a multiplier that gives people like huge earnings opportunities to like a fixed dollar amount. So instead of making like New Year's Eve, you can make like 9x multiple on the trip, and then that's scaled down to saying like, well, you can make like $5 on this trip instead of 9x. And so there's a major difference there, and but you've also seen on a per trip basis them start to pull back on that more, start to invest a lot more in tipping functionality and experience to make sure more consumers tip more. They tip more, they tip more frequently, and so you see that like 30% of rides now on rideshare have a tip, but over 95% of those have a tip on delivery. And so they're just increasing efficiencies in their like logistics networks and how they're kind of structuring variable versus fixed. And then like the other variable pay was the non-trip incentives. So those are the ones that are not those are like milestone based things like, hey, take 100 trips this week and get unlock a $50 bonus or things like that. And they want to win the loyalty for the week. So when you look at their take and their take rate there, a lot of that, the more they invest in the bonus and incentive plays, the more negatively impacts that. And so they want to get the consumer, they've been getting the consumer to front more of the variable pay and front the driver pay so they can pull back on what they actually have to invest from a cash standpoint to get as they are really striving towards building a more profitable and sustainable business. So quite a tug of war that's happening there in the marketplace, and that's why you've seen driver pay kind of go down over the years. You've seen consumer pay or pricing go up over the years, and so those multipliers still apply to us as we take rides. But when for us who drive, you see like it's not the same way. So they've just been doing a lot of different things to kind of widen the spread of the margin there, so they can actually become operate more profitably.
I never thought about tipping in delivery versus tipping in rideshare, and it makes so much sense. I definitely tip much more frequently. I mean, I tip all the time on delivery, and I don't tip
Yeah,
every time on
on
rideshare.
rideshare.
I think it's partly like part of the reason why you're in the car. And there's a reason for the tip. It's like you might have had a bad experience. Like you're not always going to want to tip the
Yeah.
driver that's like constantly like jerking you around or whatever. But there's also just a broader, I don't know, cultural acceptance tipping, I guess, for delivery. Although I don't know, because we're not really used to deliveries. Like it's also a new concept. Like, what do you make of all this? Like, why is there such a big discrepancy?
I mean, I think part of it is like from a consumer standpoint is like we're more attuned to tipping when food is involved. It's like you tip in a restaurant all the time. And, now tipping has started to become, tipping's been embedded in freaking every POS now. It's like, someone hands you a notebook and you're buying supplies for your kids at school. And it's like, do you want to tip for this? No, I don't want to tip for this. I just did all the work to buy the supplies. But I think I think part of it's like the perception around food and as relates to tipping. I think that I think the food companies invested more aggressively and early on in the tipping experience as well, because the delivery fees, like they make money on the delivery fees, right? And they're taking, I think we see like a median of like 30% take from the actual fee that they actually charge, which is a much smaller number than a rideshare trip. A rideshare trip's about $9-10 per trip. The delivery fee, or like what they get from a delivery standpoint, like they may be like $2 to $5.
And so who
And
do you
so
mean? Who's they in this example? The companies?
they is like the companies, the service providers. And because of that, I think that you've seen the delivery companies invest more aggressively in that variable piece, like the getting the tipping frequency up much higher, faster. It didn't exist like that years ago. Like, I mean, it was probably closer down to like 50%. And so it's massive now. It's a huge component of like the pay. If you don't tip on a delivery, the driver's screwed. Like they are screwed. Like like their pay may be on this like massive order. They may have gotten, I mean, I'll say massive, but like an average order, they deliver you food, probably $3-4 a pay for that order. So like if you don't tip on that, like they're like they're gonna be pretty upset with you and with the delivery company on that front. So I think it's been like kind of almost a necessity for them to figure out, because their margins are so slim on like the delivery fees, and they can't pay a lot to the worker. And so like there's interesting kind of balance to figure out that it's really challenging, that they, I think, started to find some success in over the past 2 years.
I never thought about these things until just now, and it is fascinating. And to your point, it has very little to do with the actual experience itself, and it's more so the industry or what we're used to in that realm. Like when food is involved, we're used to tipping. When it's receiving deliveries, receiving packages, at the same time, like we're not used to paying for shipping on things. And so I can see why you don't want to pay. Like if you're comparing, I'm going to buy something on Amazon, I get free delivery versus I'm going to buy something at whatever, and I'm going to have a driver deliver it to my house, then I don't want to pay for that shipping because I'm used to free shipping. But at the same
Yeah,
time, I'm more likely to tip on these deliveries than I am on a ride share. So it's all these like, I don't know, these behaviors that were or concepts that we're used to from that industry that then somehow translates to this digital world. Even at the end of the day, it's like the same thing. We're all, whether it's a tip or a delivery fee or just the rideshare cost itself, it's all to be coming from the same consumer pocket.
yeah. And what's interesting about it is just like how those behaviors and societal norms have such a direct impact on someone's income that you don't even realize, and just how those marketplaces are structured.
Where's your business now? Is it still focusing? I mean, you have obviously multi-sided business yourself. Are you still focusing on the drivers? You're focusing on these data buyers,
Yeah.
advertisers? What's your focus? What's your
Where
revenue
do you,
breakdown?
how do you focus? And where do you focus? Core of what we do is always is and always will be focused on maximizing gig workers' income. So if we lose sight of that, nothing else works, right? And so that's something we've always kept close to heart, is our mission here. And I think what's great is like I love any business when you can actually you know find a great market fit, but like in a way that also has a direct impact on someone's like income and like how they live and things like that. So I think that's we are focused on building Gridwise to on a global scale, and being the de facto operating platform for gig workers globally. And we see these challenges and problems existing for gig workers across the world. Now, naturally, as we scale the platform, the exhaust of the data will feed into the pipelines that we have in the product, analytics and metrics that we built over time, and we'll continue to enhance those, and make it more seamless for ways that people can consume the data, make it increase the time to value to derive insights, which I think is a lot of what, it's just even companies like System2 were really built and designed to help a lot of companies do. Is like those are the things that we'll continue investing in on the data business, but never lose sight of the core product that we have, and focusing on scaling our impact. You're actually muted right now. Okay.
My bad. Yeah. How many users do you guys have now on the driver side?
Yeah, I would say that we have hundreds of thousands of them who are using us on a yearly basis, and we look at it like that because they're kind of cyclical. There's a large portion of the user base who's like cyclical in and out of work, and then there's like your kind of persistent full timers. So if you look at that on a monthly basis, we're well above like the 100,000 threshold of active users. And on a monthly or on an annual basis, you have hundreds of thousands of them who are usually using us there. So we've got pretty large scale within the U.S. Very high density in the top 100 cities. While we have, we cover hundreds and hundreds of cities across the U.S. And I think it's setting us up well for starting to consider other geographies outside of here.
Awesome. Last question. Do you still drive for any of these platforms?
Yeah, I would say it's not as much as I used to, and I don't have a vehicle, but it gives me the ability. So I don't have a vehicle now, and it gives me the ability to take a lot more rides with them now. But I would say culturally is like our team, a large portion of our team drives on a pretty frequent basis. So I think it's something that's been, you don't always have the opportunity in a company or when you build a product to be able to just live in your user's shoes all the time. And so I think in a lot of consumer companies, you arguably can. In this one, it's an interesting one where I think we're allowed to, and I think it's a great way that we are able to embody that and encourage our team to continue like doing that to live through the driver's perspective.
I love that. I think as you can probably tell, I enjoy chatting with strangers. And so it's whenever I get into an Uber or Lyft, I definitely talk their ears off. But it would be kind of interesting. I've never been on the other side. It would be interesting to do that with the passengers. I think, yeah, you get all sorts of people obviously in these places, and there aren't that many
Yeah,
that in today's world, like not many places where you can have a serendipitous conversation with a stranger. So as as weird as it is, like I'm being inside of a car is now one of the few places where we have some kind of connection to humanity, unless you're, with your wife in Bulgaria and getting to sit down at the dinner table. This is our modern equivalent of that.
yeah. It's a it's an interesting experience, and it can be a lot of fun, but it also is it's eye opening, and I think it's also like the greatest way to learn a new city that you move to. If you move to a new city, you sign up to do rideshare, you are an expert in that city in like in a couple of weeks because like I think you could live in a city for a while and once you start taking Ubers or Lyfts, like you start driving, you're like, I didn't even know this existed here. Oh wow, this is a cool new spot. I never heard of this. And so it's a really interesting way to kind of and then when you think about the delivery, it kind of takes it a step further because now you're going into places, you're going into apartment complexes or other things, and now you start to really just like have this kind of mental model of the entire city mapped out from that experience. So that's kind of cool as well.
Yeah, and it's not just a map, it's a popularity weighted map. So you're not going to the places no one wants to go to by definition. You're going to
Yeah.
places that a bunch of people are interested in, and that's a good way to figure out what's actually there. And that would actually be an interesting thing to like, what are the restaurants that people recommend to their friends versus the ones that they actually go to themselves? And I'm sure
Mm.
it's not always the same thing.
Yeah, probably not. I can imagine.